I don't believe that we should ever have a good money again before we take the thing out of the hands of government.
Welcome everyone, we're Simply Bitcoin. We break down the news, the daily fail, meme review, software releases, hardware releases, and the websites by plebs. Joining us today, fellow Bitcoiner and author of Layered Money, I'm talking about Nik Bhatia is joining us, but right now we are diving into the numbers. Let's do it.
Number time!
Brought to you by Bitcoin 2022. It's going to be the largest Bitcoin conference ever, hosted in sunny Miami Beach, Florida. Conference is coming up, guys. April 6th and 9th. Get your tickets now. Jordan Peterson, Naeem Bukele, Michael Saylor, Saifedean, Jack Mallers, Adam Back, Senator Cynthia Lummis. All of them are going to speak at this awesome conference. And you can take advantage of the link down below for 10% off your tickets to the biggest, largest Bitcoin conference ever, Bitcoin 2022.
At the time of this recording, the block height is 725,477. The Bitcoin price, 43,540. Chain rewrite days, 713. Total public lightning capacity, 3,447.70. Moscow time, 2297. Blocks to the halvening, 114,523. And the Samurai Whirlpool unspent capacity. Samurai Whirlpool is a coin, join, or collaborative spend service. The unspent capacity of that pool is 4,380.62. That went up. Nico, the numbers.
The numbers, bro. So something, the last couple of days, if you guys haven't been living under a rock, we had a massive green candle. But again, we don't like to talk about the price. You know, again, you can't really. That's not really speculation. That's actually what happened, right? Phil, how big was the pump? It was crazy. It was crazy.
It seems that it was about 5K. It may have been slightly over 5K.
So it was a big pump, right? So that's not what I want to talk about. But if you actually look at some metrics, right? What happened was fascinating, and I think this was really interesting. And I think it's let's kind of get everyone's thoughts on this, right? This is Glassnode, and a very interesting metric. It's called Bitcoin number of addresses with balance of 1K or above. Now, something really fascinating happened yesterday, right? Check this out. Let me minimize this so you guys can see. Right, here's the number of Bitcoin addresses is 1K. It drops, right? There's only 2,000. Check this out, Phil. Look what happened yesterday.
Oh my gosh.
I don't think the last time that happened really was in the beginning of 2019, right?
Yeah.
So all of a sudden, out of nowhere, right, we had a giant accumulation going up. Now, there's people on Twitter that are saying, oh, that's just people reorganizing their addresses or custodians doing that. But I don't believe them. And the reason I don't believe that is because all of a sudden we had a 5K candle. So I don't think it's a coincidence that we had a 5K candle and we had a jump in addresses that have 1K Bitcoin or more from 2,112 addresses to 2,259 addresses. So that's 100 addresses that all of a sudden they had 1K Bitcoin or more, right? And 1K Bitcoin, 1,000 times 43,000, it's a lot of money, right?
Yeah. I'm going to say the signal is that first candle that you showed from 2019, right? Because we were still in because Bitcoin time completely screws me up. I think that we were still in the bear market at that point and we were just starting to pick up, or maybe not even. But the point is that it was a time when, quote unquote, Bitcoin was dying or dead. And yet, take a look at the activity we just saw yesterday at these price levels. And then we couple that with the amount of Bitcoin that is locked in Lightning channels that is growing, and the development. I think I hate the hopium, but right now I'm feeling very hopeful.
Absolutely, Nick. Again, but again, this is total speculation because there's absolutely no way to know what's going on. But if you had to ballpark it, right? That is a huge. You saw it, right? The graph speaks for itself. It was literally a candlestick 90 degrees all the way up. So what do you think that could be?
Well, my favorite chatter on Twitter was that it was 100 Russian oligarchs that all of a sudden now have 40 million in Bitcoin each in these single addresses. Some people had fun with that. It could have been a withdrawal. We were, saying something about exchanges. I believe something like a withdrawal, a mass withdrawal, maybe something like that, where you're seeing, maybe people that are involved in the Swift ramifications or something along those lines, that they're taking Bitcoin off their exchanges into their own custody, or some sort of reorg, which seems likely with such a jarring jump. But it is important to put it in the context of war and how we haven't seen a war like this in quite a long time. So it's understandable that something unexpected could happen from the blockchain data perspective.
Absolutely. And so do you think, so my dad kind of comes from that perspective too, which was, and he told me, he's like, Nico, this might be the catalyst that, essentially props up Bitcoin and shows to the world, like, holy crap, right? And just to kind of give you guys a refresher of what has happened in this last year, really, we had Canada, the Canadian government, banning, or essentially freezing people's accounts because they were donating to certain political movements and stuff. And then Bitcoin was the only thing standing, right? Bitcoin was the only thing that they could not freeze. And then we had, not too long ago, you had the Ukrainian government raising money directly from the whole world directly in Bitcoin, and I think they had a shitcoin. I think they had Ethereum as well, right? So Nik, do you believe that as well? Like, do you think that this might be the catalyst that, puts Bitcoin in the eyes of everyone? It really shows everyone that it cannot be stopped?
Yeah, I'm more in the camp of the slow and steady adoption. I tweeted something yesterday about hyper Bitcoinization versus the slow and steady Bitcoinization. I believe every one of these events geopolitically attracts people to Bitcoin at the margin. And it shows the use case of Bitcoin one thing at a time. And the Russia-Ukraine conflict, in which Russia is looking to potentially use Bitcoin as a cross-border payment rail, and Ukraine looking to use Bitcoin as a fundraising tool. Both sides of the war are using Bitcoin. It is without a doubt a really big, important moment for Bitcoin in its young history. But I don't think it's, before Russia-Ukraine, after Russia-Ukraine. I think it's just this steady adoption. El Salvador being one of those moments where people thought, is this the moment? No, it's one thing at a time. And this is another one of those things, but it's a big one.
Awesome. Yeah.
I really like that perspective, the showing Bitcoin's use cases one at a time. I really like that a lot, and it also kind of made me think of this point about. I've heard people talk about this, the slow unwinding of the current financial system. So, you know what? I think to your point, Nik, I mean, slow and steady would probably just be better for everyone. Right,
and
but as you know,
when you think about the Federal Reserve and the way that they've responded to events since 2007, each one of those times could have been the end of the dollar, but it's not each time, because the Fed is willing to come in, step in. We call it extend and pretend, or kick the can down the road. Whatever they're doing, they will continue to do that, assuming that the Fed is not going to kick the can down the road next time we have a financial crisis, and there will be another time. It's silly. We have to assume that they are going to have the slowest death possible for the dollar instead of anything that's going to happen in rapid fashion. So I believe Bitcoin will, again, attract the adoption and the users on the way out for the dollar, and it's just going to happen over a long period of time.
It's going to be, I'll just say this, guys, this is a very fascinating time to be alive. This is, so many things are just happening all at once. The catalyst was really, the election of Donald Trump. It started just like things, just Band-Aid just kept ripping off, and all these things that you would think that you wouldn't see just you started happening. The war in Ukraine, the Bitcoin becoming legal tender in El Salvador, so many Bitcoin being banned in China, right? There was a recent announcement that the Supreme Court in China, if they catch you transacting in Bitcoin, you get 10 years in prison. Like it's just crazy how all of this is playing out. Fascinating time, and there's no better time in history, I think, to stack Bitcoin. It's always a good time to stack Bitcoin.
And let's not ignore the fact that there are plenty, I don't want to quantify it, but let's say plenty of Chinese millionaires and billionaires and Communist Party officials that own Bitcoin. They have their own cold storage situation. And because we know how much Bitcoin was mined in China over the last many years. So we know for sure that they're hoarding Bitcoin in China, even though they're making it illegal for their citizens to mine it, etc. So there's always, even though you see the ban, there's always another story or another layer behind it.
Absolutely.
To Nik's point, though, to Nik's point, though, this is something that I learned back in 2017, and I don't remember who said it first, but governments who censor the most need censor-resistant money the most.
Absolutely.
And there you go. Nik just points that, just proves that right there with China. And I totally agree with that. I mean, come on. They understand the system that they're living in. You're going to tell me that the people higher up, elite, the ones capable with the means? Of course. They're hoarding Bitcoin.
Oh, man. But at the end of all this, it really shows to the world that the incentives of Bitcoin are irresistible. And unless governments replace those incentives, which I don't think they'll be able to, right? There's always going to be someone trying to stack sats or trying to mine. But anyways, Phil, it's time for the Daily Fail.
Brought to you by Amber app. Check them out, amber.app. It's the easiest way to buy Bitcoin, a stacking app by actual Bitcoiners. Low fees, fair spreads, smart automation. The link is down below.
Amber, the smart way to stack sats.
These are cringe. I'll just start that off right there, right off the bat. These are cringe fails. And you know what, though? They reminded me a lot of when I was an early equity investor, when I first got into it, and I made a lot of mistakes. So with that intro, we are going to dive into tokens that don't need to exist for use cases that right now, if they could be monetized, they would be, and when they can be monetized, they are. Anyways, let's dive right into it. Smart Chem's token launch to push for eco-friendly cleaning products. Nice. It never stops with the ESG stuff, Nico. Even if it's just these kind of creepy, weird little shit coins that are completely insignificant, it doesn't matter because they're always just putting that message out there for you. Anyways, here we go. So the Euro 50 billion global industrial cleaning product market is having a significant ecological impact. Smart Chem uses its patent chemical technology of intelligent fluids to provide a safer alternative to remove grease, dust, and dirt with ingredients that are biodegradable and pH neutral. If you're wondering why this needs to be money, let me continue. To raise awareness and allow for ease of access to eco-friendly products, Smart Chem is holding a token sale. Very clever. Here we go. SMAC acts as, and that's the shitcoin, by the way, acts as the native utility token for the Smart Chem platform. Unlike other tokens available on the market, SMAC is more than just a token for transactions. Part of the Change to Green campaign, supporting the token means that individuals and firms represent a commitment to a better Earth, sustaining the environment, commitment to a positive impact, backing up the efforts of environmental NGOs, raising their support of the UN's Sustainable Development Goals. None of that needs to be money. Anyways, other blockchain-based tokens only incite investors from a financial impact. While SMAC also has a monetary benefit, it has a fallback option. And this is the part right here. It can be redeemed on the Smart Chem platform in lieu of purchasing any cleaning product offered by Intelligent Fluids. Okay. So it's a gift card. It's a gift card that if you decide not to hold the token, you can buy their crappy cleaning product. Anyways, okay, so look, before I dive into the next fail, I just want to go back to my point about equities. So once upon a time, there was a company, which I completely forget the name of, that was going to clean the oceans. They were going to clean up all the oceans. They had developed these very sophisticated sponges. They were going to put these sponges in the most toxic places of the ocean, and these sponges just absorb all the grease, all the oil, and then the company just comes by, picks them up, and supposedly they can be disposed of in an eco-friendly way. Well, I got to tell you, this made sense to 22-year-old or 23-year-old Phil. Okay? 23-year-old version of me was like, yeah, let's fix the environment. This is genius. Sponges that suck up all the crap in the ocean. So I bought shares. Do you know what those shares are worth today? The company doesn't exist anymore. That should give you a hint. Those shares are worth 0. Now, going back to the original point about this particular product, you don't have to invest in a Chuck E. Cheese token, okay, in order to buy, essentially a scam offering. You can just go do what I do, go get an equity, and if they can pull it off, the share price will actually go up. And because it's shares, you have voting rights. You get a little bit more than a token that is completely detached from anything of value under that token. Anyways, so before we move to the next one, I as soon as I saw that, I had to give that story because this is nonsense. It doesn't need to be a token. Cleaning up the ocean does not need to be money. This is a ruse. That's all it is.
Man, dude. So this is my favorite part of the show when I watch it, but when I go through it, I'm like, oh my god. So dude, give it to the shitcoiners to always come up with phenomenal ideas and phenomenal names to take away your Bitcoin. I think the cleaning product token, I think it went a little bit too far. But anyways, I still feel uncomfortable, so I can't think of things. Nick, what are your thoughts?
Any thoughts on this?
Token?
I will bring it back to what Phil was talking about with shares. This is the ICO scam all over again, where the coin, the token, doesn't mean anything in a court of law from United States property law perspective, from a security perspective. It doesn't mean anything. Not to mention that we don't need to monetize cleaning product gift cards. I'm all for cleaning the ocean. Find out, in a more serious, way, when we talk about all this ESG stuff and, across the planet, we know how much, I think malice is in there in terms of the West not wanting China and India to develop, especially China by restricting their coal usage. So there's that whole perspective, but then there's also the perspective that corporations, multinational corporations, are polluting the planet in a very significant way. So I do like to find the good actors within the ESG narrative that are actually trying to help the planet in real ways. I don't like the climate change narrative. I like the pollution narrative, because pollution is something we can see with our own eyes, and that trash pile in the middle of the Pacific Ocean. These are all things I actually genuinely feel passionate about. So I do hope that, as a society, we can find ways to clean the ocean and other things like that without shitcoins and ICOs and anything to do with a token.
And these giant bureaucratic institutions as well, right?
Exactly.
Phil, what is the next fail we're going to want to tear our eyes out on?
Get ready. All right, here we go.
The best part of the show is that we get, some of the brightest people in the Bitcoin industry, and this is what Phil makes us talk about.
This is what I make people watch. It's brutal. No, but look, it's really good because we have the brightest minds in Bitcoin coming on the show and examining these things with us. Number one, they can call us out, right? They can sit there and be like, Phil, you're totally full of shit. This thing is totally legit, okay? And here's why. Haven't had that happen yet, but who knows? Maybe we're wrong about shitcoins. Not. Okay, anyways, I proceed. Okay, let's dive into this one. I think that this was another share from fellow Bitcoiner at Hans Films. I think it was him that shared this with us. Let's dive into it. A project called Fries Deo raises $5.4 million to purchase fast food restaurants. That's right, guys. The first fail had a theme, and this one is very similarly themed as well. Anyways, let's dive into it. A new Deo dedicated to purchasing fast food restaurants called Fries Deo has raised more than $5.4 million to achieve its goal. That's right, we don't even need to go through this whole thing. All we have is this tiny little piece. Last week, Bitcoin.com reported on a newly launched Deo that is attempting to purchase the NFL's Denver Broncos football franchise for $4 billion. Ever since 2016's Genesis Deo, which we covered a few days ago, the Deo hack, and subsequent hack that followed, Deo concepts have grown in popularity and security seems stronger. That means nothing. That means nothing at all. All I understood was, hey, there was this massive rug pull through this, through this loophole. We should do more products that involve this loophole. Anyway, that's all I understood. Okay, so look. A Deo for fast food restaurants. I am going to help everyone out, and no, this is not investment advice in any way, shape, or form. Again, I want to show you that if you want to own a piece of multiple restaurants, you don't need a shitcoin, and you actually can have voting rights if that's what you desire, and you can get paid a dividend even if you want. Let's examine Darden Restaurants. All right? This is a company out of the US, and lo and behold, Darden Restaurants owns a whole bunch of brands. You can buy shares of Darden Restaurants if you want, okay? They go for about $145 a share. But guess what? That gives you voting rights, okay? You don't need a Deo where you have absolutely no, it's a representation of ownership. You have no ownership over any of this. That token can go straight to zero. And you will have no recourse, okay? So if you want to own a bunch of restaurants, don't be an idiot, go and buy some shares, okay? In Canada, there's another company called Mighty Food Group, and they own all of these restaurants. Do you notice how what I'm showing you is what that garbage Deo is trying to do, pretending that they're offering some type of value to the market? Don't get fooled by this crap. These Deos, these are just liquidity pools designed to rug pull you, okay? Nothing else. None of this needs to be money, and that liquidity is not for you. It's for someone else to take. Anyways, you want to own a piece of the restaurants? Do it correctly. Don't go with this garbage shitcoin imitation.
Man, you give it to the shitcoiners to come up with anything and everything, like I always say, to try to get you to willingly sell your Bitcoin for their shitcoin. So yeah, like the branding, the marketing, it's genius, but that's all it is. It's branding and marketing. There's nothing below that. What you said, Phil, and Nick actually brought a really good point earlier in the first fail, right? Which is essentially you get no legal protection. NFTs are the same. There's no copyright protection for NFTs either, right? So there's no court precedent. Correct. So why would I buy the DAO if I'm not protected? It doesn't make sense, right? But again, it doesn't need to make sense. All these people are concerned about is you willingly selling your Bitcoin, getting excited about it, so that they can enrich themselves with Bitcoin, because that's what all these shitcoin devs do, and you get stuck holding a worthless token, right? So yeah, Nick, what are your thoughts on this? Okay, 2 quick thoughts here. I'm not going to touch the Fries thing. It's just too ridiculous. But let's talk about this decentralized autonomous organization concept for a second, okay? Ignoring the 2016 hack in which we've proven that Ethereum is a centralized product, and with one chain rollback, it's more than zero, and therefore, it's a centralized offering. But with the Constitution bid that we had a few months ago, just to bring everyone up to speed, a group tried to buy the U.S. Constitution and was outbid. And then you think about the Broncos' $4 billion bid here.
The idea that you would pre-announce your bid is the most stupid auction behavior I've ever seen in my life. So it just makes no sense that you would pre-announce the goal just so that somebody else can bid 4.1 billion and take it from you. It's just ridiculously stupid. Then when the Constitution bid failed because they pre-announced it, and Ken Griffin outbid them easily because he knew what number to eclipse. Because it's all smart contract based and they had to put their money in and then get their money out, they spent so much on gas, which whatever the hell that is, that people took massive capital loss just doing a failed bid for the Constitution. So like you could have written on the paper that I will commit this and done it in a private way that doesn't actually cost physically any money when committing or decommitting from that. So yeah, there's just a lot of stupidity here. I hope I covered some of it.
Absolutely. Oh, Phil, you actually covered that. We did a daily fail on the Constitution.
That's right. That was one of our daily fails. And you bring up an excellent point about publicizing the bid beforehand. That is pure marketing. That's all it is, right? Because that's what it is. And I say this a million times over, that all they're doing is selling the sizzle. You get this idea in your head, hey, look, this organization's going to own a national football team? This organization's going to own a piece of the Constitution? So all of a sudden you start to think all of this imaginary hopium type of stuff. But really, at the end of the day, none of this needs to be money. None of it needs to be monetized. This is just it. All it is designed to separate you from your time value. That's all it is.
Dude, it's fascinating to see all this play out. People are going to scam. This is why you should only stick to Bitcoin. This is why, we're Bitcoin only. I think all of these coins, they suffer from one thing, right? Is they don't need to be, two things really. They don't need to be tokens, and the monetary policy or the ability for a human being to manipulate money for their advantage is not taken out of the equation. Only Bitcoin fixes that. So, man, excellent fails. Fries and... what is it? Restaurant fries, and what was the other one, Phil?
What was the other one? Fries and some
oceans.
company.
The Oceans. The Oceans. There we go. There we go.
The Oceans.
Anyways, let us know down in the comments, guys. Comment. But anyways, Phil, it's time for the Daily Meme Review. Brought to you by Citadel 21. It's the best Bitcoin cultural zine. It's stories, articles, comics by actual Bitcoiners. The cover is different every volume. This is volume 10. It just came out. All the artwork is by Bitcoiners, and they're scarce. There's only 1,000 physical copies made per volume. Get your print of Citadel 21 today. All right, everybody, first meme for today is brought to us by a legendary meme lord. He came up with laser rate to 100k. Well, he was part of the crew that came up with laser rate to 100k. RD_BTC. Anyways, this will be interesting. Super Fowers fucking with the monetary rails. Bitcoiners in the back. Excellent template. Very good meme.
I love that template.
Brought to us by Sal. Check this out. Reporter's uniform until February 2022. Reporter's uniform from February 23, 2022. It's so true. Okay, moving on to the next one by Bitcoin Leota. If you still don't own Bitcoin after the last 2 years, you're a fucking idiot. With the sun in the background. It's so good, dude, because you think it's going to say something serious and inspirational, All right, next one by Pubby. Good luck to everyone trying to sort out all the propaganda, disinformation, gaslighting going on with the world today. It's seemingly endless. Ukraine, commie, NATO, media, US, Russia. Thing that I cannot say. All right, next one brought to us by Luke. It's getting tough out there. I'm doing my best, but if you feel... like if I ever made a mistake, let me know. Me after trying to figure out what news is real, what news isn't regarding Ukraine and Russia. It's so true. I still have no idea what's going on. Anyways, here we go. Next one's brought to us by Honk Capital, BTC Padre. You can see after Putin invaded, the M2 money supply exploded. We need liquidity to combat these problems. That's the best one. Okay, awesome memes by some awesome plebs. For that, Phil, I'm going to give a very special score. It's a box, but in the box, it's a little mouse and one Beat AirPod thing.
Only one?
Just one. Not two.
The box is a good idea.
Not the pair, just one.
Literally one.
And the mouse.
Oh,
Yeah.
is that a Disney mouse?
I don't think we could say Disney.
We can't say Disney. Okay, is that a cartoon mouse?
Yes.
That is well known?
It's a cartoon mouse.
Cartoon mouse that's well known. Okay, cool. Well, you know what? Like I said yesterday, guys, I am totally running out of stuff in my basement because I'm moving. So, we are going with... this wrist guard.
Oh, very
That's
good.
right, from skateboarding, because when you bail, you usually land on your wrists, and eventually your hands, well, they're not in good shape.
It's true. It's very true. Very good score, Phil.
Wrist guards.
Anyways, Nick, what would you give those awesome memes?
I'm gonna give it a BA2 plus because there were 2 memes in there that really had me laughing pretty hard.
That's a very good score.
I'm a huge meme fan, and Bitcoin memes is, it's why I'm here. Let's be honest.
Absolutely.
Nick gets it.
Nick gets it. So we've been saying, guys, right, in the narrative trench warfare that we're currently fighting, if tweets are bullets, memes are frickin' artillery. But anyways, guys, we want to know if you agree with our scores, you disagree. Let us know down in the comment section. Comment. Help us defeat the shitcoin channels. Of course, join our Telegram group. Link us some dank Bitcoin memes to review. And of course, make sure to subscribe to us on alternative video platforms like rumble.com and our personal favorite, bitcointv.com. They don't censor there because it's Bitcoin TV. But anyways, Phil, it's time for the daily news. Brought to you by Cloaks.com. They make the best 3D printed Bitcoin merch, like the famous 3D printed Bitcoin art sculpture. Opens up, you put your favorite hardware wallet in there, and you can get this in any custom color your heart desires. CryptoCloaks.com. All right, guys, so we're just gonna, talk about Nick and, not talk about Nick. We're gonna talk about Nick, but we're gonna talk about what Nick is expert on, right? He wrote this awesome book called Layered Bunny, and we're gonna get to that. But first, we're gonna talk about a tweet that Nick accidentally covered in the fail, so we're gonna retouch it again. We're gonna elaborate a little bit on it, but Nick tweeted yesterday, I'm realizing that I believe much more in slow Bitcoinization rather than hyper Bitcoinization, slow and steady adoption while we're in the race. So I'm not gonna ask Nick what he said during the fail, but I'm gonna ask him why he thinks that. Nick, what makes you think that? What made you change, or were you always kind of just waiting and see? You never bought the idea of hyper Bitcoinization, so explain your logic.
My favorite reaction was there were a few .eths that were labeling this tweet as cope. I found that really, really funny because they think that the narrative of hyper Bitcoinization is the one and only narrative that all Bitcoiners for all times have ever gone with and have to go with in the future, which is pretty ridiculous. To answer your question, though, I've never believed in a hyper Bitcoinization scenario, but I will say that when the article was written many years ago, it was speculative, it was also theoretical, and it was also a forecast as well that adoption would keep going for this thing that had very little adoption at the time. I believe hyper Bitcoinization was written in 2012 or 13 or 14. So it was a really, really long time ago. I've never believed in this idea that we would just rapidly go to a Bitcoin future, right away. My book covers this, how I explain that gold has unraveled as a many thousand-year story, and in the monetary system's perspective, a 700-800 year story there. Bitcoin's story is going to take decades. I think it's always been obvious to me that something like this will take a long time to unravel, as well as the fact that we have one of the first things that attracted me to Bitcoin was when I started to understand the discrepancy between the amount of assets in the world and the amount of safe assets in the world. So that's like looking at the US Treasury market, which is today at 30 trillion, but the total assets, if you include stocks, bonds, and property, let's say, is something like half of 1 quadrillion. So, at least 10 times the size of the safe asset base is the total asset base. Now, with gold being only 1/3 of the treasury asset base, it makes Bitcoin, which is a fraction of gold, it makes Bitcoin to me an obvious play to reach gold at the very minimum. That there's so many assets in the world that when they get demonetized, this is something Saylor talks about, demonetizing stocks, demonetizing property, that money finds its way out of assets that were previously held only for their monetary purpose, not for their real purpose, which is voting rights in companies, productive land, all these things. It makes Bitcoin very obvious to me. This was my original Bitcoin thesis in 2016. Tour de Meester, a popular Bitcoiner on Twitter, his work from 2013 to 2015 was the stuff that I binged in 2016 when I was falling down the rabbit hole, as well as Adam Back and things like that. So I've always believed in slow Bitcoinization. I think it's easier to talk about now because I've never used the word hyper Bitcoinization in any of my written material. I think that should also explain to people, readers, or new people that are finding my work for the first time that this is not something that I've been married to. I'm much more in this slow and steady camp, and I think that the Canadian truckers and the Russia-Ukraine crisis are both perfect examples of how it hits heads. The mainstream news, headline news that Bitcoin is being used for Canada, Bitcoin's being used in the Eastern European war, and then what happens? Does Bitcoin go up by 100%? Does it go to $1 million? Do 50 countries adopt Bitcoin as legal tender in the next 30 days? No, none of that stuff happens. In fact, the price cannot even be correlated to any one geopolitical event ever. So how is that hyper Bitcoinization? It's not. It's just slow and steady. And maybe I'll be wrong when somebody said, "Oh, you're not understanding that the hyper Bitcoinization is basically one day in the future to the next day where, okay, it happened in the most rapid way that it could have." Well, okay, maybe I'll be wrong in a few years if we go from one speed to the next, but I just view this as a long journey.
Phil?
I think you bring up a really good point about hyper Bitcoinization, because for me, every single time I saw that term, I came into Bitcoin around late 2016, and I had only heard that term maybe a year or so later. And for me, I feel like it's very much subject to interpretation. Like, I feel like the hopium, I'm sorry to say it this way, but like the hopium sellers, right? They want us to think that hyper Bitcoinization is this like turn of a switch, or this moment in time where everything else changes and all of a sudden we go forward. But to your point, I feel like maybe it's just a poor way to use that word, but all of this is Bitcoinization. Right? All of these little steps, what you just talked about, Ukraine and Russia, the China ban, Intel coming to the table and providing, starting to build their second generation miner. Like, to me, that, like, I don't know. I guess I've always just kind of stayed away from trying to define a timeline, because I'm really knowledgeable about the fact that my timelines are going to be biased based on my incentives and my desire.
Absolutely.
Yeah, and think about the fact that to defend the hyper Bitcoinization narrative, which you say is up for interpretation, if we think about monetary human history as a 5,000-year story, if Bitcoin rapidly achieves money in 20 years, that counts as hyper Bitcoinization, because 20 years in a 5,000-year story is pretty fucking fast. So, so you do have to put it in context, and it is a descriptive, it's just a way to describe an adoption cycle. And I support, the concepts in it, but maybe if we want to put a timeline on it, if you want to describe hyper as something that happens within months or a year, that's not something that I necessarily believe in.
Absolutely.
Agreed.
I love the way that you explain it. Nik, I can't help but to think when you were describing the process, right? Look, there's going to be definitely value from other assets to Bitcoin, right? Like you said. But I think in the process, I think that really takes away power from governments, right? What are your thoughts on that? Because you were describing that, and then that just was like a red flag in my head, right? So the bond market, you said it was $30 trillion, or what did you say was the
U.S. Treasury market is 30 trillion, and then the U.S. total bond market is about double that, 60 trillion, and the global bond market's about 100 trillion.
So, and I'm gonna make this. I'm going to define it like a pleb, Nik. So feel free to correct me. But bonds are one of the ways that the U.S. government raises money. Is that correct to say that?
Yes.
And clearly, right, Bitcoin provides a better solution for people trying to store value. So would it be a stretch to say that it's a threat to the bond market? It takes away power, right? Because this is how the U.S. government raises money. If people decide to put their money in Bitcoin instead, wouldn't you say that's a threat? How are governments responding to that? How do you see this playing out?
Yes. So if people choose Bitcoin, or investors choose Bitcoin over government bonds, whether they're U.S. treasuries or German bunds, et cetera, that does pose a threat to governments because it impacts their ability to finance themselves. We are not seeing that today in any material way, I would say. At the institutional level, where, let's say, the U.S. Treasury auctions over 100 billion of gross securities every week. And that includes bills all the way out to 7-day bills all the way out to 30-year bonds. So that volume, let's say the gross issuance in a month from the Treasury Department might equal the entire market cap of Bitcoin, which is, like 700 billion, 800 billion, right? So they're just not in the same ballpark yet. And I'm long Bitcoin. I'm long Bitcoin personally and in my career. So I think this is the direction we're going. But when you want to have the conversation about Bitcoin and its store of value advantages taking away from the U.S. government's ability to finance itself, we just are not there yet. We're not there anytime in the next couple of years either, from the U.S. government's perspective. So, but it's not something to ignore, and I'm not dismissing your question. It's just materially, it's not there. It's the same reason, Nico, why Russia is not going to be using Bitcoin only to replace SWIFT tomorrow. It's not. It's already made, a minimum of 8 years of preparations. And actually, if you go back to the China agreement, bilateral, you have 12 years of preparation that Russia, is doing to avoid SWIFT sanctions and the dollar. And it's not Bitcoin, okay? That doesn't mean that some oligarchs aren't buying Bitcoin, Russian citizens, or the government's thinking about mining Bitcoin or accumulating it. It's probably doing all of that. But it's not ready to step in today for the rails for cross-border finance. Wholly, maybe marginally, but not wholly. And the same thing is for the government bond question that you're asking.
Why would you say it's not ready? Is it more so because the necessary infrastructure isn't there, or is it more
infrastructure is solid? Infrastructure is solid. The size isn't there. Now, just because Bitcoin is 800 billion in market cap doesn't mean that there's 800 billion of Bitcoin to use for cross-border payments. A lot of Bitcoin has been lost. A lot of it is held tightly. A lot of it is on exchanges, and very little of it is in the free float. Clark Moody might have it on the dashboard. I'm not sure, what the float is, right now. But it's a very small portion of Bitcoin, okay, that can actually be used to transact. And so for cross-border payments to happen with Russia and other countries, Russia and those countries would have to go acquire the Bitcoin and then start using it. And that would drive the price way up. So it's a bullish catalyst for Bitcoin. This is something I'm going to publish about in the next couple of days. People are saying, oh, Bitcoin can't step in today. That's bearish for Bitcoin. No, it's super bullish because it means that they haven't taken advantage of those rails yet. And so the marginal trader will be a buyer, not a seller, as it tries to, make its way into that network so it can use it. So I hope that answers your question.
Yeah, phenomenal answer. So Nik, you said something very interesting as well, right? Where the U.S. Treasury is issuing, what was the monetary number?
Yeah, so there's two numbers. There's net and gross. The net number that the Treasury issues is how much the debt goes up by every week or every month. The gross number is how much they physically issue, and we offset that against what has matured, and that's where the net number comes from. So every day there's Treasury debt that's maturing, and the government has to pay back the bondholders. But then every week they're also, borrowing the money back. So a lot of that money that they borrow just goes to pay maturity, and then the excess is introduced into the supply. So we have 20 to $50 billion auction sizes per bill note, meaning 1 month bill, 2 month bill, 3 month bill, 6 month bill, 12-month bill, 2-year note, 3-year note, 5-year note, 7-year note, 10-year note, 20-year bond, 30-year bond. Each one of those issues is the bills on a weekly basis, and the shorter ones on a weekly basis, and then the longer ones on a monthly or quarterly basis are issued 50 billion all the time. So you're getting numbers that can total up to Bitcoin's market cap in gross issuance in 1 month from the Treasury. If they issued $700 billion of Treasury bonds, even if they've had 500 million in maturing, that's still 700 billion of paper that they've printed in 1 month. And Bitcoin is so tiny relative to these numbers that we're seeing. And I sat on a Treasury trading desk. That's my background. So I got to see these issues in real time and just kept thinking about how really small Bitcoin is still today.
There's so much way to go. So Nik, the question that I was going to ask you is, we know that not even the biggest sovereign wealth funds, whether it's the Norwegian sovereign wealth, they don't have the money to be buying all that. So the question is, who's buying that? The Fed is buying that, right? The Fed is buying those bonds. Am I correct to say that?
Yes, the Fed owns right now about 6+ trillion of Treasury securities. So like 1/5 of the, I'm just roughly saying about 1/5 of the float. And in terms of the net marginal buyer of Treasuries, it's been only the Fed for the last few years, as the Treasury issues all this debt and then the Fed buys it through QE. It's a way of monetizing the debt in an indirect way. It's one of the things that offended me most as an economics student in 2010, when my professor is trying to tell me that that QE is not monetizing the debt, when I can see the actual identifier being issued by the Treasury 2 weeks later being purchased by Goldman Sachs and then being purchased by the Fed from Goldman Sachs through open market operations, and that's how quantitative easing works. So yes, the Fed is one of the largest buyers, and when they do step away, this is now a little bit of technical bond market stuff, but when the Fed steps away, it increases the net amount of Treasuries that have to land in private hands. The private hands, meaning the investment universe, when they take those Treasuries on, they actually have no problem taking them on as long as the yield is high enough. And that purchase of Treasuries instead of the rest of the risk market actually can affect prices of other things. And so I know it's a little tangent there, but when the Fed steps away, those Treasuries, they don't go unpurchased. They get purchased. But what gets unpurchased? Everything else. And so risk prices are in jeopardy when the Fed steps away. And that's a flow issue here, and a little technical, but it's very important.
So in accounting, that's kosher, right? This mechanism that they have to buy the things that they're issuing. But the way that I see it is a little bit of black magic, right? Because there's really no buyer of these bonds there. It's like as if the analogy that I want to make, it's like in the Monopoly game, it's like as if the bank was a player, and one of the rules that it says in the Monopoly is the bank never runs out of money, right? So,
well, I want to say something though, Nico, because it's you're bringing up a very important point. But I will say the reason I bring out the chain reaction is because we don't actually know the answer to that. If the Fed steps away, I believe everybody ends up buying US Treasuries and not everything else, meaning not stocks, not corporate bonds, not high yield, not emerging market stocks, not emerging market currencies. The lack of liquidity from the Fed creates a fear complex that drives people into Treasuries and away from risk assets. So I don't think we'll ever know, because whenever the Fed steps away, risk prices crash and US Treasury prices go up in all of that liquidity crisis. So it's why the Fed will never step away. It's why the dollar is permanently in disrepair. That's what I talk about in layered money. And it's why Bitcoin is the sensible long position over a long time period, because the dollar is dying a slow death because the Fed can never step away.
So this is first of all, is a fascinating conversation. I'm really enjoying it. Thank you, Nik. Nik, will there ever be a time, and you emphasize the fact that clearly not now or in the the recent future, or the next couple of years, but how will this transition happen? How will these big giant financial institutions, because it's what you said, right? The bonds are the staple point, or the stability of the financial world. That's how people see bonds. How do you ever see that changing in the future? I know it's very hard to see it right now. Like it was very difficult to see 10 years ago that Bitcoin would become legal tender of a sovereign country, right? But, and we are getting into speculation territory. But yeah, how do you see that transition playing out, Nik? Like how, in your mind, clearly you have experience in this. Do you see it ever happening? What needs to change, et cetera, et cetera?
Right now, the importance of government bonds in the current financial system and the rails, it's something that's not going away anytime soon. And it is why I talk about Bitcoin adoption happening at the margin, because you'll have smaller countries add Bitcoin to their reserves. And those reserves were previously held in US Treasury securities. So that type of activity is what I'm looking toward, not necessarily looking for Citibank to start housing Bitcoin. They're just not going to, because especially the American banks, European banks that are primary dealers, they are primary dealers because the word primary means they are obligated to show up at the Treasury auctions in the primary market and engage with the Fed and the investing public to deal those treasuries. They're dealers and they are in the primary market. So as long as we have primary dealers and this, trio of the Fed, the Treasury, and the primary dealers working their magic, their black magic, as you say, it's just going to be status quo. You'll look at the Bitcoin price for the signal as to how the rest of the world is viewing that status quo. But that status quo isn't going away. It's going to keep going. The Bitcoin price is going to be our signal.
I love that. That's fascinating. Nik, we're running out of time, so I want to hit you with one last question, which is, and you said this to me when we had our long format style podcast, and I thought it was fascinating. You said that central banks' reaction to Bitcoin was central bank digital currencies. Could you elaborate a little bit on that?
Yes. Bitcoin is an innovation that we've never seen before as a human society, right? it has taken value and made it scarce and digital at the same time. That's not something that's ever existed before. When the world woke up to this fact over, let's say, from 2010 to 2013, Bitcoin had its first entrance to the mainstream stage, where people recognized that this was a new technology, maybe early stages of the internet potential, and central banks and banks woke up and said, there's something going on here that we didn't innovate, we didn't create it, but it is a threat to us. It's an existential threat right now, but it's there. People are into digital money that's digitally native, and they understand, to the tune of $10 billion market cap at the time, they understand that it's not the same thing as your iPhone deposit balance at Wells Fargo. Those are not the same type of digital money. Central banks, the Bank of England is where the first speech came out of. They recognized that this was the case. And so they had to do basically a PR campaign for themselves to continue their relevancy in going into the future. So they said, we'll steal Bitcoin as a framework, modernize our financial infrastructure, but it won't be anything like Bitcoin. We won't even reference it. We'll call it something else. We'll use private solutions, and we'll pretend like Bitcoin doesn't matter because we have this new thing that we'll try out. So Bitcoin's success, early success, sparked a fear in central banks that made them have to do something. And we still don't know the final form that it will take, but there's plenty of speeches and papers that have been written over the last several years about CBDC.
Absolutely. The Fed just released, it was like a 40-page document we covered on the show. Nik, last question. How will this play out, the battle between CBDCs and Bitcoin?
I think it will play out in a market-driven way. I said that the price will reflect the situation. I still believe that. We are we are in a multipolar world now. This is the new geopolitical framework that we all have to go with. It's not US only. It's not US versus China. It's everybody for themselves. And I'll plug a geopolitical strategist and friend of mine real quick. His name is Marco Papic, Papic. He gave a great interview this week about the Russia situation. He's reminding us that the Huawei situation, where the United States is trying to get countries around the world to ban Chinese 5G technology because of this bipolarity that the US thinks it's in, they barely got anybody to go along with it. So the US has no pull on the global stage anymore. China is up against a lot of issues domestically, demographic issues, energy issues. Their advance on the global stage is probably done for the next several years, according to Marco. And then you bring in Putin trying to flex his muscles. We are in a multipolar world. And so in a multipolar world, any country that adopts Bitcoin is a win for Bitcoin, because it's not going to have this equal and opposite reaction from a bipolar world. And so at the margin, the advance just keeps happening. And over a long enough time horizon, Bitcoin starts challenging, first it'll be the yen, then it'll be the renminbi, then it'll be the pound, then it'll be the euro. And all of a sudden you'll have the dollar and Bitcoin on equal footing in terms of who's using what rail across the world over the next, of course, many, many years.
Fascinating. Thank you so much, Nik. But Phil, there was an open source software release today. Why don't you tell everybody about it?
Software releases brought to you by CipherSafe. Check them out, cyphersafe.io. It's the best place to store your Bitcoin seed. Store your seed in the Cypher wheel, or the all-new Cypher grid. Comes complete with punch tool and tamper-resistant wire and disappears because of my green screen. We've got Bitcoin S version 1.9.0 that was released. It's down below in the show notes. Guys, don't forget, we release every episode in audio only as well. Don't forget to check us out on Apple Podcasts, Spotify, and Anchor.
Awesome. Thank you, Phil. All right, guys, that was the show. But before we go, I want to give a very special shout out to our awesome guest. He is the author of Layered Money. In the book, he takes you into the origins of how money has evolved to function in a layered manner. Very cool. I also want to give a very special shout out to our awesome sponsor, rephard.com. Phil and I wear the hoodies every day, and you can take advantage of the link down below for 15% off anything on the store, rephard.com. Guys, if you enjoyed the show, you know what to do. Smash that like button. And of course, if you want to continue hearing the catastrophic fails from the shitcoins and the Bitcoin news from the pleb perspective, definitely consider subscribing to Simply Bitcoin. And we'll see you when we get back from Vegas, guys, on Tuesday.
To quote our awesome guest, the dollar is dying a slow death because the Fed can't walk away.